How's it going, everyone? This is Israel, your loan officer down here in Southern California. Today is January 12, 2021. And well, to start off the news, I wanted to share this piece of information. It has to do with Bitcoin. Turns out that in 2011, when Bitcoin was just getting started, they decided to put a contest together where different people would create these small little clip videos to let everyone know what Bitcoin was all about. Well, it turns out that Stefan Thomas, a German programmer living here in Southern California, ended up being the winner. As part of his award, he was gifted 7,002 in a form of Bitcoin. Now, as many of you know, every time you're dealing with Bitcoin, you're given a password where you're able to then punch that password in and have access to your funds. Well, Mr. Thomas went ahead and placed his password inside in one of these Iron Key external hard drives. To his surprise, a year later, he wanted to go in, access his password, but he had forgotten. And well, if you ever use one of these Iron Key hard drives, it gives you 10 tries. After that 10th try, if you put in the wrong password, it completely recrypts itself, and so either you have to format the drive or you just have to toss it away because it will not give you access to it. Mr. Thomas has tried it 8 different times and he's down to 2. If he's able to crack that hard drive, he's looking at around $220 million worth of Bitcoin. Now, I just wanted to share this with you because it does have something to do with what's going on in the markets. And with that, let's start with today's news. Gradual realization that the record run is justifying a shift towards higher rates. What do they mean? Well, this morning's alert notes that the bond market is in the midst of one of its scarier scenarios. The ingredients are as follow. Now, these ingredients are basically driving the mortgage interest rates to go ever so high. First one of those is the stock market. As you know, it's a roller coaster, really, but for the most part, it has been going up. Second component is the United States Federal Reserve. When the whole pandemic started, well, government basically said, hey, you got to help me out on this. And so the Federal Reserve jumped in to start purchasing treasuries. And the third piece or third ingredient has to do with politics. As we know, Democrats now have a majority in the Senate. And what that means is that moving forward, this new administration, whenever they want to put new policies or create new laws, it's going to make it that much easier to reach their goals. So when you put all these 3 elements together, no surprise, we start showing higher mortgage rates. And that's what we've been seeing for the past few days. Now, there are 2 things that are going to happen this week. In fact, Thursday is the day where all of us that follow the mortgage rates are going to pay close attention to it. Why? Because our new elected president, Mr. Biden, is going to propose a new stimulus plan. And on that same day, the feds are going to basically tell the public if they're going to continue purchasing these treasuries. Now, just with these 2 pieces of information, there is a pretty good chance that rates could maybe not continue to go up as fast as they have. Maybe they'll slow them down just a bit, but they'll definitely have an impact on the mortgage industry. And so with that, let's jump on to how the mortgage-backed security is looking like. Okay, today we got hammered yet again, negative 21. If you've been following this channel all throughout the week, we just been hitting those negative numbers time and time again. And now I'm going to show you the reaction that this mortgage-backed securities market had with today's mortgage rates. So let's jump right into a conventional loan. These rates as of today, January 12, are fixed for 30 years and require a 20% down payment on a purchase of a home. If you notice today's rates versus yesterday's, there has been an increase. And not only with us, if you take a look at the competition, Chase is looking at a 3% with a FICO score of 740. Here with us, you're looking at a 2.875. You can go ahead and pause the video and just, depending on what your FICO FICO score is, this is the rate that we would be offering you as of today. Let's jump really quick to the second program, this being an FHA loan. Again, 30-year fixed. The only difference is it only requires a 3.5% down payment. Feel free to pause the video. Again, depending on your FICO score, these are the rates that we are offering. As you can see, everyone between the ranges of 700 and 640 got clobbered. The rates are going up. Only exception is those that have a 740 FICO score or higher. But look at this. If you look down below, Quicken Loans, Citibank, US Bank, they're looking at 2.99, 2.875, and 2.75. Even Quicken Loans at 2.75 requires a 740 FICO score. If you look at our rates, 660 will give you even a lower interest rate than Quicken Loans. Just food for thought. As you can see, our rates are really competitive. Okay, and to finalize this video, if you are in the process of refinancing, I would probably toss the dice right about now and wait till Thursday. Chances are with these two pieces of information, we're going to get a positive outlook in regards to the mortgage rates. If you just have to lock in your rate because you just don't want to take that risk, then I would highly recommend you start locking in those rates no later than tomorrow. With that, if you are a homeowner and are considering making a purchase, definitely give me a call at 661-388-7667. Also, for all the homeowners out there, if you guys are thinking about, putting your house on the market, give us a call, 661-388-7667. We have a great team of realtors that would be able to help you on that. Again, may God bless this country. May God bless you. And I'll see you guys on the next video. Take care. Bye-bye.